Welcome to Business Brief for today, August the 21st, 2026. And now, Nigeria's crude oil production could rise above 1.7 million barrels per day in the second half of the year, as improved security, reduced oil theft, and renewed investment in upstream operations support a recovery in output. Now, the projection from the Nigeria Economic Summit Group group points to stronger production at a time when the federal government is relying heavily on oil earnings to strengthen public finances and improve foreign exchange inflows. Increased production alongside relatively strong international crude prices could provide additional fiscal space for the government. The expected improvement is also being linked around oil-producing communities with efforts to reduce crude theft, attacks on pipelines, helping operators restore production, increase investments in existing fields, and new upstream projects is also expected to contribute to the projected rise in output. If production rises too and remains above the 1.7 million barrels per day level, Nigeria could strengthen its position in the international oil market while improving government revenue from crude exports, but analysts say sustained gains will depend on continued security improvement, investment in the sector, and the ability to maintain production without renewed disruption. Nigeria's energy inflation has dropped sharply to 4.37%, its lowest level in 4 months, falling from 9.83% recorded the previous month and pointing to a moderation in the pace at which energy-related costs are rising. The decline comes as Nigeria continues to experience major changes in energy and transportation costs, with movement in fuel prices having a direct impact on businesses and households. Energy costs remain particularly important because they influence the cost of transporting goods, running businesses, and providing essential services. The latest figure provides some relief on businesses that have been dealing with elevated operating costs, particularly manufacturers and small enterprises that depend heavily on fuel and electricity. A sustained moderation could gradually reduce some of the cost pressures feeding into prices across the economy. However, the decline in energy inflation does not necessarily mean energy prices themselves have become low. It indicates that the rate at which those costs are increasing has slowed. Businesses and consumers will therefore now be watching subsequent inflation data to determine whether the moderation is sustained and whether it begins to translate into broader price relief. And the federal government is challenging Nigerian banks and fintech companies to help unlock an estimated $14.8 billion annual financing opportunity for women as part of efforts to expand access to capital and strengthen women's participation in the economy. The call was made at the National Gender Inclusion Conference in Abuja, where attention was drawn to the financing gap facing women-owned businesses and entrepreneurs. Despite their significant participation in Nigeria's informal and small business economy, many women continue to face difficulties accessing affordable credit, investment, and other formal financial services. Government officials are urging financial institutions to develop products that respond more directly to the needs of women-owned businesses, including more accessible credit facility and digital financial services. The push also places greater emphasis on fintech companies, which could use technology to reach women who remain outside traditional banking channels. Unlocking the estimated $14.8 billion opportunity could have wider economic implications, particularly for small businesses, job creations, and household income. But turning the opportunity into actual financing will depend on how effectively banks and fintech companies address affordability, collateral requirements, financial literacy, and other barriers that continue to limit women's access to capital.